George Newberry here of the Newberry team, part of Berkshire Hathaway Home Services California Properties. If making your mortgage payment is a bit tight right now and you're thinking about requesting a loan modification from your bank to help you get through a tough spell, but you don't know how or where to start, this video will give you that information. And relax, I don't want any money. I've been providing information to homeowners about loan mods and short sales for years without asking them for a dime. Now, the first thing you need to do is contact your lender and tell them you want to do a loan modification. They'll put you in touch with the department that handles them. Oh, make sure to have your loan number and social security number ready, otherwise they won't talk to you. I need to be upfront and honest here. Your chances aren't very good. Statistics show only about 8% of submitted loan modification packages are ever approved. But even though the success rate is low, I highly recommend you do a loan modification analysis before you ever consider selling your home. Now, if you're thinking of relying on some attorney's word because he claims to have a high success rate getting loan mods approved, be careful. In many cases where attorneys are involved, even when the lender knows the homeowner has very little hope of keeping their property, they'll still approve the loan modification because they want to avoid a lawsuit. They believe that particular applicant will be in default again quickly, but feel they can get at least a few more payments out of the homeowner before they have to foreclose. What I'm suggesting is for you to do your own analysis based on your current situation. Be clear here, I'm not saying don't use an attorney. Just do your homework first and don't rely on it, trust me. Also, never pay someone up front to help you. There are many scam artists out there preying on people. Now, here are some things to consider when doing your loan mod analysis. The first thing you need to know is that in evaluating your request, your lender will be looking at your debt to income ratio. It should be 31% or less, but new regulations have allowed a higher ratio. Now, if you don't know what I'm talking about, ask your CPA. They can explain it. After that, you need to determine if your current situation is temporary or long-term. If it's temporary, go ahead and continue your analysis. If it's long-term, well, you may want to watch another of my videos that deals with short sales. Now, once you've gotten to this point, you need to calculate what payment you can reasonably afford to make. Oh, be sure to include any penalties you've incurred into your debt and that you've calculated your new payment using a reasonable interest rate. But don't count on your lender agreeing immediately to the payment you calculated and that you feel you can comfortably make. It's still a business and they can't perform miracles. Now, once you've done all that, you need to look at whether or not your home has equity. There are still homeowners who owe more than what they can currently sell their home for. If you have equity, no problem. However, if your home is in a negative position, that is what we realtors say is upside down, you need to look at the amount. To best understand the reason for this analysis, let me give you a quick example. Let's say your loan is for $500,000 and your home is currently worth $300,000. Even if you can afford the new payment, a loan mod still might not be the right way to go depending on your long-term goals. Given the situation I just described, if your home was to appreciate 3% each year, it would take over 23 years to see your home's value reach what you currently owe on it. Now, after all that, the last thing you need to look at is, does a loan mod make financial sense? In other words, will your new mortgage be lower than the rent you can pay on a similar home, and would waiting a few years to purchase another home be too long to wait? Please understand, I'm not saying you should dump your home and become a renter. I'm simply saying it's something you need to seriously think about. Once you've completed your analysis, if you decide to apply for a loan modification, the next question is, where do you begin? To find out what paperwork you need to submit, you should start with the Making Home Affordable website. Now, that's not a typo you see below. It's home, not homes. In summary, The best advice I can give you is to be consistent, honest, and don't exaggerate. The lender will appreciate it. You need to provide a hardship letter that describes real hardship. Be realistic. Not being able to pay the new adjustable rate mortgage the lender quotes you is not considered a hardship. If they offer you a monthly payment you can't afford, simply don't agree to it. Once you start working with your lender, take a deep breath, be patient, and keep your cool. Loan mods take a long time. Remember, this is a negotiation, and being pleasant will always give you the best results. I hope this short video has been helpful and that you and your family have a great day. Thank you.